world is breathing a sigh of relief. That's after the U.S. Federal Reserve decided against scaling back its stimulus program. Markets and investors cheered the move, or lack thereof. Joining me now live is Nina Maria-Potts, who's been following the story all day long. And what did Fed Chairman Ben Bernanke have to say?
Well, Mike, it's been a huge day at the Federal Reserve. Navigating these economic waters, as you know, is a bit like being the captain of a massive tanker. With every small shift or maneuver, you could have potentially huge ramifications on the economy much further down the line. And this is an economy that looks quite different today from how it did 5 years ago. So a lot of factors in play bearing down on the Fed's decision today. And as you say, it was a decision that took absolutely everybody by surprise. The big decision was whether or not to taper off. We now have the answer to that question. But of course, that opens the way for another glaring question, which is when will the Fed decide to roll back its stimulus efforts, and how will it do that, and when it does, by how much, Mike?
Well, Nina, that also provokes another question. If Ben Bernanke doesn't want to take his foot off the gas pedal right now, doesn't it make it harder to do it down the road a piece?
It makes it potentially much harder. Ben Bernanke was very clear in his reasons for deciding not to take his foot off the pedal today. He cited three main issues. One was low labor market participation. That was the big one. He also talked about his frustration, his intense frustration at the political wrangling on Capitol Hill over the budget ahead of the looming deadline, the stalemate, the gridlock, the threat of the budget, the government shutdown, really expressing the fact that that is posing a real drag on the U.S. economy. And thirdly is the whole issue of the recent rise in mortgage rates. The U.S. housing market, as we know, has bounced back, and the Fed does not want to mess with that. That's perfectly clear. But you're quite right to raise the issue about what happens, much further down the line. There are a couple of theories out there that Ben Bernanke is trying to carve out a little bit more wiggle room for the Fed's activities, and that's predicated on this idea that the unemployment rate is indicative, but it's not maybe fundamental to everything that is going on. And the other theory out there is that he's trying to send a reassuring message to the markets, and that is that in this whole process of trying to wean the U.S. economy off these extraordinary stimulus efforts, he's going to do that, the Fed is going to do that in a way that is not precipitous and not dangerous. Mike?
Well, the markets got the message, didn't they? But let's talk about the international developing markets. What did he have to say about them?
Well, on the international markets front, we saw how the markets reacted today. As you know, with the international developing markets, there's been some discontent and concern about the way that the U.S. has handled its stimulus efforts. But I think the theory is that the Federal Reserve has its own domestic concerns to worry about, that there are factors in play on the international markets, certainly in the emerging markets, that are beyond the U.S.'s control. So Ben Bernanke is sending a very strong message that while he's sensitive to those issues, really ultimately this is about fixing the U.S. economy first.
Nina Maria-Potts, live for us in Washington, D.C. Thanks so much.